Well, welcome, Echo, to the show. I'm really glad to have you on. We're going to talk about money today. I love to talk about money. That sounds bad, but you're the expert. So will you please let our audience know about your background and what you're doing today? And you've got a new book.
Yeah. And well, David, great to be on the show. I'm thrilled and look forward to the conversation today. My background. So I was born and raised in southern part of China, and I lived in Shenzhen on the border of Hong Kong. And Shenzhen today is one of the richest city in China. So just imagine the first stock exchange in China was in Shenzhen. I remember the first McDonald's was in Shenzhen. And so when I was 20 years old, I came over to the US here to pursue my degree in finance and accounting with $800 in my pocket. And I survived. I made it. So I graduated in Minnesota here and started my job actually in private accounting for a year and 9 months. And then I changed to public accounting and worked for KPMG Pete Marwick in downtown Minneapolis as a tax specialist, serving many corporate executives and entrepreneurs and wealthy families, help them with tax planning, financial planning, including preparing tax returns, including individual returns, trust returns, and gift tax returns. I just love the financial planning and tax planning during the year. I just hated the tax season. I hate it so much. I guess after 3 tax seasons, I decided that wasn't my long-term goal. And even though the company obviously was, I would say, great training place for a tax CPA. I decided to change my career from the most secure occupation and safe occupation as a tax CPA for KPMG to be a financial advisor. I would say that was high risk and high reward career. Exactly in 2000, if you remember 2000, the stock market started tanking. Yes. So I did not have the luxury of, riding the market, and I just was challenged by immediately the stock market decline as a young financial advisor. I think I was 29 years old. And I think fast forward, now we're talking about 20 years later. Now I have my own company. I started 5.5 years ago, Echo Wealth Management, an independent registered investment advisor with SEC. My team and I right now manage more than $125 million for about 80 clients across the country. And so I'm located in the suburb of Minneapolis, the city called Plymouth, Minnesota. What I do right now is I think I'm having my dream job right now. I help these very successful, driven professionals. Many of them are corporate executives with Fortune 500 companies to help them take the complexity out of wealth management. And because I have all kinds of work experience in private accounting, public accounting, as a tax CPA, and then as a portfolio manager today, I'm able to, the complexity I'm talking about with a lot of corporate executives and entrepreneurs are either their compensation structure with stock options, restricted stock, deferred compensation, pension, and all entrepreneurs, being an entrepreneur myself, we all know that sometimes we just have too many hats, right? We wear too many hats at the same time. So what I want to do is be the personal CFO for these driven professionals and help them organize their personal financial affairs better so that they make very wise decisions, and I help them achieve their goals. So that's what I do right now on a regular basis. And I would say it's not just number crunching. As you already mentioned, soft skills are really important to succeed in many fields. And I think in personal wealth management, I have realized that of course, it's important to have analytical skills to decide what investments to put in a portfolio for that client. But I think equally important is to try to communicate well and gain their trust very early on in the relationship. I think that's how we can make this relationship last through the good times and bad times. And yeah, so David, that's kind of what I do now.
Talk to me about the complexities. So you mentioned the complexities, that there's some complexities with compensation if they're an entrepreneur, how much they pay themselves or how they pay themselves, whatever. But what are those complexities that often people are not dealing with?
Yeah.
And therefore they're losing time. Because one of the things, at 63, I look back and it's like, I could have done some things differently to be financially stronger today. So maybe you've got some examples there that would help me better understand.
Yeah, definitely. So in my new book, it was released in June. So obviously you can get it anywhere on Amazon.com. Own Your Future is the title.
Yeah, Own Your Future is the title. Do you can you hold it up for those people that are watching on YouTube?
Yeah. Okay. Own Your Future, one woman's story of immigration and financial freedom.
Awesome.
And in the book, I certainly have many examples. And today, I think it's important for me to mention some examples, like for a corporate executive, for example, someone just got promoted to VP, working for Fortune 500 companies. And the compensation package becomes a lot more complicated because you have to understand they have non-qualified stock options, restricted stock. They can elect to defer their compensation in deferred compensation plan, and they have regular 401k profit sharing plan. So all I'm talking about is in addition to salary and bonus, they got this package, the equity compensation package there. It becomes such an important part of the overall compensation package. Some people are very confident in what they do. If they are sales VP or marketing VP, they have quarterly goals they need to hit, right? But on the personal side, when it becomes complex, number one, they don't have the expertise. Number two, they really rather not thinking about what to do after, traveling like 50% of the time for work. So what I have done is, for that individual, go through a very thorough cash flow planning. We call it Echo Dashboard. So I have a video of Echo Dashboard on my company website, echowealthmanagement.com, a 2-minute video, so people can kind of see what it looks like to be a comprehensive financial plan that is cash flow based. Let me explain the difference between some financial planning software that just you plug in some numbers. It says, oh, can you achieve your goal? It will say yes. But what is different about what I want to do to help these people is have very comprehensive tool that showcase your net worth today and base assumptions on your lifestyle expenses and your income that include all the equity. So all the equity compensation is included there. So I monitor the grant and recommend when to exercise the options. Everything is incorporated. Cash flow based means every single year you can see projected cash inflow and outflow details year by year to age 95. So you're able to see the cash flow going forward, where you're getting the money, and if you have to pay expenses, where you're making the withdrawal. And you can see how you grow your net worth from today to your financial independence day. That could be 55-year-old. It could be 65-year-old, depending on the client's goal. So once I get everything organized in one place for this family, it's so rewarding to be able to see, the husband and wife to be on the same page. You know how challenging that could be in a relationship, right? Sometimes one person makes that investment decision, may not have the expertise or discipline to communicate with the other person. Many times could be the stay-home spouse taking care of 3 kids and sending 3 kids to private schools, right? So it's really great for me to see that they can see what kind of goals they set for themselves with my assistance, short-term, intermediate term, and long-term, and also analyze their insurance. Make sure they have the proper and right kind of insurance. Extremely important is a long-term disability insurance for this high-income earner. Of course, life insurance. For certain clients, could be potential long-term care insurance at some point. And also help them organize estate plan, I cannot emphasize more. I mean, in today, during pandemic, how many people have not reviewed their estate plan, or they just don't have estate plan at all? So I have one chapter in the book talking about estate planning.
Okay, so Echo, where are the biggest mistakes made?
I think a lot of people simply don't even have a plan. So what I'm saying is they are just making decisions based on emotions. Very often, when you don't have a detailed cash flow plan, you tend to be we are human, right? We tend to be more emotional about investment decisions. And I think people make the mistake. First, they don't have a plan, so they don't truly understand where they're trying to go, because they don't understand where they are right now and what they need to save and invest to get to where they want to be for financial independence day. And then another thing is when the market started crashing, when they do not have a professional like me who has the, CFP designation or CFA designation to help that individual or family to customize the investment portfolio that is appropriate for their risk level, and time horizon, then they tend to make those mistakes. As we know, market crash 34%. They may say, well, I just don't want to lose more. I sell it. I park somewhere safe. Now I can sleep now. Well, the market rebounded 58%. We have seen that happening. And they missed that uptick. So some people, because I think the biggest mistake, number one, is they simply don't have a plan, or they don't have anyone they can trust to help them plan ahead. And that really caused them to make many, what I consider is emotional mistakes. That's why in my book, there's an entire chapter about how to overcome, behavioral biases. And we all have them. So it's important for me to help people identify them so that they can have more positive investing experience.
So one of my recent guests really feels strongly that next year, particularly in the first half of the year, we're gonna drop into a huge recession, and there seemed to be some logic to that. And I'm kind of curious what your thoughts are going into next year, and if somebody really didn't have a great plan, or they're wondering, or they had no plan at all, what would you advise them to expect? Maybe early next year, and then what should they be doing now so that no matter what happens, they're going to be best prepared?
Yeah, that's exactly actually what I would like people to think about is we should not be shocked market sometimes crash, right? We just cannot pinpoint exactly the timing, but we were expecting the market to do something dramatic at some point. So the best way to prepare for it is, well, of course, I say work with the financial advisor. In my book, I also talk about how to select the right one. Have resources to go for it. And if you're doing it on your own by following the framework in my book, also understand the importance of having adequate emergency fund. The emergency fund in general should be able to pay for at least 6 months of living expenses. Okay, so you should have something that you're not risking in the stock market, it's in checking or savings account. Then this is the best time to review your current portfolio. It's difficult for people to understand how much risk they are taking if they don't do some hypothetical analysis of existing portfolio to stress test the existing portfolio and say, this could actually potentially lose either 30% in 1 year or 50% in 1 year. Try to tweak it to the appropriate amount of risk so that you are not shocked when that happens and then make the crazy mistake of selling at low and then get back in when it's high. So I would say check on your emergency fund if it's not adequate. Save more by cutting more discretionary spending to get that amount up. And then review your portfolio if you are not capable of doing it or you are not interested in doing it. That's why I would suggest everybody should consider finding the trusted fiduciary financial advisor who has your best interest in mind and allow that person to help you assemble a financial dream team including a tax CPA, an estate attorney, insurance broker. Potentially, if you're a business owner, you need a good banker, a mortgage consultant. I just keep adding them on. Like, you need to count on someone who already have that network. And over the past 20 years, what I heard from top clients, they have told me that I really feel that you are playing like a financial quarterback role. I know the overall picture. I know their dreams and goals. And I know what kind of tools to use, what kind of people I should connect them. And then I coordinate and make that happen. So periodically, I would review with these people and say, remember, those were the issues that keep you up at night. And have we done better together to solve those issues? Because these people are already very driven. Just imagine they're successful for a reason, right? They are overachievers in business. And I just feel so passionate about, helping people achieve their goals by simplifying their wealth management. So when things are not chaotic, as I say, using Echo Dashboard or something similar, they can see it on their iPhone or iPad, anywhere on their laptop when they're traveling. They can see everything happening right there. And we have also mobile app. So they can see the rate of return, net of fees, any period they want. They can see their cash flow. So I can calm them down. If they panic, I always kind of tell them that, there's not much you can do on the day. The market lost 5%. Remember, we talked about that. That's when there could be potential buying opportunity for the extra cash you have, because a lot of people don't need the money for the next year. They just need to have enough money when they retire, right?
You talk about the relationship with the banker. I think a lot of companies were reminded of the importance of having good banking relationships when the PPP loans came out. And some people couldn't get them because they didn't have the banking relationship. And, so that's an important thing. I can see how that would also play in your personal life, to have that banking relationship. If part of your portfolio is investing in real estate, for instance, when the market drops or something like that, if you already have the relationship, you have some even informal pre-approvals to make investments when the market drops, and it will at some point. The real estate market's been crazy. I'm curious on the stock market side, what you do to help people understand when it's time to sell, or whether you use any stop orders, which is kind of old fashioned, but anything to, and our audience may not understand that. I spent 5 years on the stock exchange in San Francisco. So you may want to explain that, but
sure.
How do you help them explain when to sell? Because experiencing those huge drops, like when the market dropped recently significantly, it did turn out to be a buying opportunity. It could have gone much lower also. So it's a little tough to figure out. In 2008, we had a similar situation that was horrific. Looked like there was no bottom for a moment there. And then, it did turn. So how do you help them understand when to take a profit? Nobody sells at the top and buys at the bottom. We play somewhere in between. You don't do both. So how do you help them?
I think the easy way for me to explain is when I manage clients' money, I have discretionary trading authority, meaning that they already authorize me to do trading without asking them to sign every single document when I change the security. So because I don't get paid commission, I get paid based on the account balance. They are giving me the full access in terms of freedom to choose any strategies I see fit. That helps me manage the downside risk because as a professional advisor, I can implement some what I consider alternative strategies in client portfolio. I can actually use options, as you mentioned, or stop loss or whatever. So I can also incorporate some strategies that already has that downside protection in client portfolio. So for example, a strategy that already has downside protection of 15% loss Well, when the S&P went down 34% loss, this strategy doesn't go down 34% because this strategy also has selling some calls to reduce the upside potential. It's okay. Last year, if S&P 500, right, had over 30%, it's okay. This strategy gave you 15% last year. So in my mind, there are strategies out there that is not too complicated, but you can implement to reduce the volatility. I see that as a very viable option for many investors simply because the bonds are very expensive right now, as you could imagine. After 8%, over 8% return last year for bond, and then another one. I mean, it's really difficult for people to buy a lot more bonds at this point if they don't need income. And so I am using equity alternatives for, as I mentioned, reduce that volatility. And I also can use some option strategies to increase income on existing portfolio. So that's
a lot of people,
one thing can do.
Yeah, in our audience, I don't think a lot of people know what a stop loss is, and they also don't understand options.
Mm-hmm.
I'm tracking with you all the way because of my background.
Yeah.
But can you slow it down and explain each one, how they work and how they can be leveraged by someone like yourself? Mm-hmm. It's not necessarily something that's wise for an individual investor.
Yeah.
Because you have to know what you're doing, you have to monitor it, you have to make adjustments. So if you could explain each one, I think it might be helpful.
Yeah, I mean, for individual investors, just remember that if a stop loss is just that you choose a price that you decided you don't want to go further below that price. So at least you know it will be sold at that price that you'd have determined.
Yeah, so if I've got a stock I bought at 50 and it's up at 65,
right?
I can put a stop loss sell in the system to sell it at 62. So what that means is if it drops to 62, it automatically triggers it's sold, even if it then runs to 90.
Right. But you got to understand and be okay with that because obviously the stock market could turn around and go up and you just sold the stock at the price, whatever you have decided. So that's why in my mind, a lot of the times if individuals do it yourselfers, they are not hiring financial advisor, this is not something I would promote. And I would, if they do it themselves, I'd rather have them do something relatively simple and just go with low cost index fund and have enough emergencies for the short term and have the long term with much longer time horizon because individual investors, if they're not educated, they can do more damage than benefit by trying to time a specific security and specific price. And of course, a lot of them don't have time anyway. So, they may not even do a good job. Yeah, exactly. So I think in my book, I mentioned about what professionals do in terms of using options and give the examples. And I think people can kind of understand, meaning that they understand it, but they don't have to do it themselves. And knowing that some financial advisors like me could incorporate that in their strategy. And I don't speak for all financial advisors. And as you know, not everybody has CFP or CFA training to do this. And so in my mind, I feel like in a book, it's important for me to reveal how wealth management is being done by fiduciary advisors like me. So to encourage people, instead of ignoring it, a lot of people just ignore it because it's too intimidating to talk about wealth management, or they just don't even know what questions to ask. So I feel like having a book to educate them about what fiduciary advisors can do for them. And so if they choose one, then they know what to expect. I think it's really important for people to know there are people there who are credible and ethical, want to help them succeed. And I think finding the right kind of partner to work together is probably the most important decision for that individual because not many people will ever read 10 books about investing and the stop loss and the options. And that's just not what they want to do. So similar to me, I will not want to paint my house. I just no, I'm hiring somebody to paint my house. And so it's kind of like that. And David, that's why I think the key message in the book is wealth management can be complicated, but it doesn't have to be. So we all know when we talk about wealth management, people are just like, oh my gosh, that's just all the numbers and financial market is too complicated. But I aim to put, examples of client studies in all these chapters. So first 2 chapters is about my personal journey. It's important for people to know if I came to this country with $800 and became a wealth management expert, I hope this story can inspire a lot more people to look at their own personal finances and take some action right now. And I think for also a lot of women who have really suffered during this downturn, and I hope that they can find, hope and also tips from the book to help them, put them in a better place by learning more and also find someone to help them.
Do you have anything, as we kind of close out, any closing comments? I mean, where you want to say anything specific to women in our audience or for leaders who want to be helping their women employees get financially stronger?
And I definitely would like people to visit my author website. That's ownyourfuture.guru. So that's GURU. So Own Your Future is the title of the book, .guru. From there, because it is my mission right now to help as many people as possible, even though I cannot be their personal financial advisor. So this site is dedicated to help many, many people, including women. And I have a blog there and people can connect with me on all social media through there. And my tips for women, I have entire chapter about that. But most important thing that people need to remember is you need to start saving early and invest wisely right now. I mean, you got to get started and don't wait until someday either you are married and you're significant other to help you make that financial decision. And I think a lot of women traditionally think that men are the one to make those investment decisions. I can tell you that you have the skills and confidence to learn and partner with the right people. You don't have to wait until when you find the Mr. Right to do something to own your future. So I really hope that, people read the book and learn something from it.
Okay. Well, that's great. Any closing comments beyond that for our audience? And once again, where do they learn more about you and your book? I know the ownyourfuture.guru is for the book. That sounds great. Sounds like it's got a lot of good resources. Anywhere else where they can find you or any closing advice?
Yeah, for the people who are interested in my firm's services, because we serve clients all across the country and we also have clients overseas. We have used Zoom for this purpose before Zoom was popular. And they can visit my company website. That's echowealthmanagement.com. And you can watch the video as I talked about the Echo dashboard. If you are interested, you can schedule online and talk to one of my team members as well. So closing comment, I would say, you know what? Wealth management can be complicated, but it doesn't have to be if you can partner with the right people and the right team.
Fabulous. Well, thank you, Echo, for spending time with us. There's been a lot of good tips there for people to learn, and hopefully they check out your book and your website.
Oh, thank you very much for the opportunity, David.